All right, we're gonna go ahead and begin. Welcome, Checkmate Trading Crew. Today is July 28th, Thursday. It is just afternoon here in New York. So let's see what is going on today. All right. Yesterday we had the Fomc meeting, and some of you expressed you didn't see this rally coming. I mean, hey, it can happen. Uh, it could have gone either way. There was no way to guess, and that's why I kept telling you guys, hey, really manage your risk. Okay. It could have gone either way. So why does stuff like this happen? So a lot of people, and you have to understand, a lot of people hedge for this. This is an unknown risk event, right? The Fed could come out and be super hawkish, and the market could go down. Or maybe they say one word that the market doesn't like, and the market could tank. And so there's a lot of institutions that hedge for FOMC, all right? And so when all these institutions are hedging and buying puts, and then all of a sudden that event is over, you can often see that a lot of puts get sold off. All those hedges that these institutions built over the last couple of weeks, they'll just, they'll get rid of them. And so when they cash in these puts, what do you think happens? And we've gone over this many times. The market maker has to buy those puts, because buying puts is a bearish position. They have to even it out by buying some of the underlying to remain neutral. Okay, so that's what we saw yesterday. Yesterday we saw a collapse in the VIX. If you look at the VIX here, let's actually take a look at the VIX chart. If you look at the VIX, this was the candle, yesterday's candle, all right? And as you can notice, the VIX, it even started down, but then and then as we got closer and closer to FOMC, it went up, and then VIX just collapsed, and that collapse caused a 2% plus rally in the S&P 500, Nasdaq went up 4% yesterday because of this. All right. And remember our growth over value chart. All right. Our growth over value chart, pretty much, pretty much everything came out expected. Here, let me pull it up so that you all can see. This played out perfectly. Okay. So I told you guys, if you're going to go long on anything, if you're going to go long on tech and growth. And this is playing out perfectly. Okay. So we'll see. I mean, it looks like the market wants to rally, and it looks like it wants to keep rallying. I do still think that we're going to have one more pullback. And again, the reason why is just because here, generally, you want this to start curling up. Now, is it possible that the market keeps rallying and this curls up? It could. All right. And if it happens, that next sell-off, that will be the buy the dip moment. Okay. But until I see that, I will still remain neutral with a bearish bias. And again, the plan here is that actually, let me show you on the SPY chart. So, the plan, again, hasn't really changed. I'm going to start buying shares at 360 and lower, at 342, buy in the money calls that are a year out below 340. I'm still going after that 4,300 zone. I mean, it just looks like from the dollar being up, I told you guys that my plan, if the dollar was over its 18-day moving average, that I'd start buying puts here at 415. But I don't think that's going to happen. I think the dollar is going to be lower than the 18-day moving average. It's probably going to be in a downtrend. If that's the case, I want to start shorting at around 4,300. All right. So 4,300, I might buy some 3 to 6 month put vertical spreads. So I'm pushing that level up. So this could rally all the way up to here. All right. And where do I get that level from? I mean, this is where we saw increased hedging demand. We saw it in April. All right. We saw it in April and May where there was hedging demand here. All right. Also, too, if you price everything in euros, all right, we're already there. Okay. That's where it's going. All right. If you look at it, it's already past its June highs, and it's already getting to those points in late April, early May, where we saw that hedging demand. So most likely this thing is probably going to go up to here, all right? And that's, it all lines up to that point. So same thing with the NASDAQ. It's already past its July highs, or June highs, I should say. It's already working on getting to that point, that end of April, early May point, okay? So that is where I see the hedging demand in options, but also, too, that's where our euro-denominated charts are headed toward as well. So I think that gives us a good R to R. Again, if we close above that, for a few sessions, then I know that we're wrong and we can get out. Okay. So, we shall see. All right. And as far as, the reaction in the bond market, was actually, there was not that much of a reaction. Bond market just kind of like waved it off. It wasn't that big of a news in the bond market. The bond market kind of didn't do much after the FOMC. Well, at least our inflation indicators and things like that. Actually, I did not check today. I told you guys this too yesterday, that the main moves in the market can happen a couple of days after FOMC. All right. So it's not unusual to see the big moves happen even after the weekend. All right. Currency and bond markets tend to move a little bit slower than stock markets do because they're just bigger markets. It's just harder to turn around the Titanic than it is a tugboat. Okay. Although these days I've been noticing currency and bond markets moving extremely fast. So we'll see. Okay. But, I still, if you want to be cautious, I still, I would say it's not a bad idea to just sit out and be patient until next week. All right. Not a bad idea. Not a bad idea at all. All right. Oh, the MOVE index dropping. All right. So it looks like some volatility is coming out of the bond market. We're still in that no man's land in TIP-TLT, although it is forming a little box here, is it not? It looks like it. Maybe it goes sideways for a bit. But again, if you see this chart TIP-TLT, that's the inflation protected treasuries divided by long-term treasuries. If you see this start sliding down, that is the bond market's way of telling the Fed that they need to hurry up and start loosening. Because in the end, the Fed will do whatever the bond market tells it to do. All right? But we're not seeing that. So if we see that, then I'll believe it. Flat. We're pretty much flat on the 10-year, 2-year. And then the stagflation. This is actually interesting. So I didn't see this. I saw this move yesterday, but this is from today, and I didn't see this today. Interesting. So that means so that it is steepening. The long end is steepening. So maybe the market is trying to price in that the Fed will not tighten as much. Maybe that's what this is. Actually, you know what? I'm curious now. Let's go see what our odds are. Maybe the odds have shifted after the so it looks like it's a 50 basis point. It looks like there's going to be a 76% chance of a 50 basis point hike in September. in September, and a 25 and a 25 basis point hike in November. Followed by either nothing or another 25 basis point hike in December. And then let's see. Do we have a rate cut? Possibility of a rate cut. Okay, and then we finished the summer out at around either somewhere between 275 to 325 basis points. So it looks like some rate cuts, potentially two, potentially one, based on how far we go by the end of this year. Okay, so are we going to this 325, 350, or are we going to 300, 325? Basically. Okay. So there's a chance we go to 350 and then we cut back. We have 50 point basis point cut at some point in the summer. Okay, so that's what the market is. The market is pricing in. So I remember, guys. Remember about a week ago it was pricing in a 25 basis point cut. So now it looks like it could be potentially a 50 basis point cut sometime next year. Okay, 50 basis points. So it does appear as if we are, or the market is starting to price in some more Fed dovishness. Okay, Fed dovishness is getting priced in, looks like. Interesting. Maybe that's why we're seeing all this very positive market response. Let's see here. S&P 500 up 0.73. What is NASDAQ? The NASDAQ, actually, is it because what is doing so well? Is it the Dow? Oh, it is the Dow. Dow's doing well. Is it bank stocks? Let's take a look and see why. Which sector is doing well right now? Utilities, real estate, industrials. Yeah, so okay, so today is rotation into some of the industrials, gold mining, and things like that. I see. So today we're seeing a little bit of that rotation back into some value plays. Okay. I mean, I'm sure it's going to go between, like this, where where you will have this sector rotation. It's just money's just rotating right now. But it is causing markets to go up. I do see that the VIX is falling. So people are probably cashing in their puts. We will see if put demand goes up again. But until some type of news comes out, and what I think is going to happen, I think, all right, just like around here, back in May, end of May, the Fed around here, the Fed started getting very hawkish tone. Okay, they started expressing a hawkish tone here. I think if junk bonds, this is HYG, if junk bonds keep going up and credit starts getting cheap again for zombie companies, where they can just issue junk bonds again for at a good market rate, I think the Fed might try to talk it down again. All right, just like they did here. Just around here, end of May, I noticed that some of the Fed governors were saying, the economic data, the inflation's coming in a little bit too hot. We may have to raise rates a little bit more, and they were increasing that rhetoric right around here, trying to talk down junk bonds. I think it may try to do that again. The Fed may try to do that again if we get to that point. I think this is the point here where junk bonds become just too cheap. or no, I'm sorry, too cheap credit becomes too cheap for companies. All right, and so it's easier for them to issue these junk bonds and get funding. So I think this is the point where the Fed may start doing that. Okay, if we close above this for 2 or 3 sessions or more, that means something has fundamentally shifted in the Fed. Okay, I think so. All right, so this is the level that I'm looking for right here in junk bonds. You can copy this level here. Don't be surprised. I think the Fed looks at this. They look at HYG. They look at TIP, TLT. They're looking at all those advances versus declines in the junk bond market. And I think, again, if HYG gets to this point right here, they're going to try to talk it down again. All right, we shall see. Okay, but that's kind of what I see going forward. DXY. Let's see what the dollar's doing. I mean, all eyes on the dollar. The dollar's up today. That's interesting. We're seeing actually a mixed bag. Actually, I'm just taking a look at our positions right now, and it looks like it's kind of mixed. Taiwan is not doing very well, and our EWT is doing all right. Which is the new position from yesterday. For yesterday, it got a little scary. I'm not gonna lie. When this thing started rallying really hard, I'm not gonna lie, that was kind of scary. But it's coming back down. Oh, it was a lot lower. We'll see. I'm not adding to any more positions. I want the dust to settle and see what happens in the beginning of next week, and I think that will add to the color of what is going on. Oh no, actually there is one that I am going to do. Amazon. Remember guys, I said that I was going to I'm going to try to short Amazon. Yeah, look at that. It went down and went back up. I am going to buy puts at the end of the day. I'm buying put spreads. Let's actually construct that trade. And the thesis for this one is based on Microsoft's earnings release. I told you guys this in the past high noon highlights. I think it was yesterday or the day before's. I said, it must have been yesterday's. Microsoft had great results in Azure. Okay, Azure went up 45%. They had multiple $100 million contracts closed last quarter. Okay, and they said they took it from one of their main competitors. Well, who could that be? Right? It could be Google. It could have been Google, but Google also had Google's Chrome and Intelligence Cloud Solutions. They did well too. All right. Who else has 100 million plus contracts that they could take from? Right? I think it's Amazon. So I think Amazon's AWS is going to underperform. All right. I used to be a huge fan of AWS until like a couple quarters ago. Their services started getting a lot slower, glitchier, and things like that. Shame on you, Amazon. I will use this as an opportunity to short this for an ER play. And again, I'm doing the July, the weeklies. I almost feel like this is a moral obligation to short this for ER based on the performance of AWS. Anyway, that kind of talk is crazy. But anyway, this is a lotto position, so keep it really small. I'm not going to do anything big on this. Literally, like, I don't know, maybe for me, I might do like $100 or a couple $100 in this, but small. I'm going to keep this extremely small. I don't want to go crazy with this, but I just want to see what's going on. 120, 115. Let's just see what that looks like. 176. Ooh. A little expensive. I mean, right now, the straddle is around $6. So it's expecting a $6 move from now until then. I mean, that means it could go all the way down to 114. No. From 122, $6. 160. 116. So that's not that great. I mean, what if we do 120, 119? So I'm just building the spread myself. Yesterday's spread would not have done well because the market, it's already gone up a lot. So I'm trying to find a good one that gives me at least like 3-to-1, 4-to-1 reward or risk. But it looks like we're gonna have to go really down the chain if we want to do this. Wow. 117, 112, 111, 116. I mean, at that point, you might as well do the 115, 110. Saying, okay, 115, 110 is 80 cents right now. That's kind of far. But it is possible. I guess it's within the realm of possibilities. Maybe there's no need to be greedy. Yeah? Maybe we shouldn't be so greedy like that. Maybe. I'm just playing around. I'm just trying to see what spread. I mean, of course, this could all change by the end of the day. And if it does change, I'll let you guys know. Okay, so 111, maybe 112. Like, these are what, $100 a spread? So I might just buy one or two. Guys, and I'm just going to keep this really small. I don't want to, like, stress out over this, Again, this is just a lotto. I'm either going to lose it all or I'm going to make it all. So, and my profits are going to be capped by the difference between the strikes. But still, it saves me from some of the IV crush. So 117 is 181, and I get to participate for 113 instead. So maybe this one, maybe the 117, 112, maybe the 116, 111. Okay, that's what I'm looking at right now as far as put spreads. So again, I'll let you guys know at closer to the end of the day what I choose. But I am looking to get into this. I want to lotto this. I'm just going to buy one or two spreads, a C note or two. It's literally $100 or two. Okay. It's like what I spend when I go out with my wife anyway. So it's just a small gamble for me. It's like, I don't know. It's like a night out at the craps table or something. Okay. So it's small money. Don't do anything too big. This is a lotto. Okay. It most likely is going to go to zero. All right, so don't be putting good money into this. But I think based on Azur's earnings, this is what could happen. All right. Oh, speaking of earnings, guys. Oh my goodness, guys. I gotta go over. I forgot about this. Hold on. Oh no. I'm sorry. Speaking of earnings. Oh, whoa! It dropped. Okay. So PPC. Remember our meat play? I mean, talk about blowing earnings out of it just blew past expectations. Now, I noticed this morning though it was rallying hard, so I was almost giving up hope. I was like, oh, there's another trade that won't happen, just like our oil trade, right? I mean, I still cry when I see this. Shoulda, woulda, coulda, right? I mean, we were literally like, I don't know. 60, 70 cents away from legging into puts right here. 60 cents in an oil market where oil is going up and down $3 or $4 a day, which is nothing. Okay, 60 cents is nothing. All right. This was so sad. This is such a sad day when we missed this trade. And I thought to myself, oh well, there goes another opportunity, But it's coming back. So what happened? Let's. I just want to see what's happened. If did it get some downgrades or what happened here? PPC. But their earnings was good. It was really good. I mean, they're performing quite well. Let's see. Why is there some news? No, no news. I guess it's sell the it's buy the rally what is it? Buy the rumor, sell the news event. People are just taking profits because it just went up so much. Okay, I can see that. I can see that, and it is what it is. All right. Ooh. So that's fine. Great. We shall wait for this. We shall wait. Okay. Let's see here. Remember, guys, our levels for this PPC. I wanted to hit that 29 zone. All right here at 29.10. It's right around that 2 standard deviation Bollinger Band, the lower Bollinger Band. All right. If you look at it on a weekly chart, which I prefer, I like the weekly charts a lot, much better than the daily charts. But it coincides with around that 18-month moving average. It is a little bit higher. It's about 50, 60. It's about 2 or 3% higher actually. So I guess what you could do is you could start legging in at the 18-month moving average. All right, but wait for your big buys on the daily lower 2 standard deviation Bollinger Band, which is about 70 cents lower at 29. Okay, right around here. Actually, 29.50 looks like a good zone. That looks like the floor, 29.50. All right, 29.50. So that's your zone that you want to start accumulating. Okay, so it's anywhere. So based on your own risk management and what your beliefs are and your strategy, I'd start legging in at like 29.83 all the way down to 29. Okay, so I'm me personally. I don't know yet which way I'm going to go. Am I going to go options or shares? I'm leaning towards shares right now, just because the option market on PPC is kind of sparse. Oh, look at that! Whoa, somebody's selling some puts. August 32 puts. Somebody just sold some huge amount of August 32 puts. Oh, look at that. That's interesting. Very interesting. Maybe somebody's trying to take assignment at lower prices. Take assignment at lower prices. At 32, they got paid $1, which means they're getting it. If they get assigned, they're getting it a little bit under $1. So they're getting it assigned at a little bit under 31. And that's what national brands tried to take over this company at. They tried to take this company over at 31. But they couldn't. That deal fell through. So interesting. I wonder who that is. It's only for 1,000. It's 1,000 contracts. So that's for 100,000 shares. 100,000 shares. So that's $3.2 million worth of shares for that trade. So somebody's accumulating. $3 million for a small little a company like this. I mean, it's a major meat producer, but it's still a relatively small company. So I can only imagine that that's probably some sort of institution. All right, they're probably looking at the same thing we're looking at. Beef prices are soaring right now. Okay, luckily we got a member who's kind of boots on the ground telling us that the price per pound is going up. They're not even selling, or they're not even letting the calves grow. They're slaughtering them. So that slaughtering of calves, that kind of, gives us an idea, or at least the guess that going down, a couple of years from now, we may not see the same type of beef supplies. Okay. So maybe this is something that, sticks around for a bit. And if that's the case, chicken and pork prices are going to go up, as consumers try to see that. Look at that. Pork prices are already starting to go up. Look at that. Pork prices are starting already to go up. So so when beef prices go up, it tends to be that people start looking for alternative proteins. So they start eating more chicken, they start eating more pork. That's what we saw here during this beef spike back in 2014. Okay, when in this right here, PPC and other, at the time, there were a lot more meat slaughterhouses. Now it's all consolidated. The big four have really gone and bought out all their competitors. PPC is one of just a few meat stocks that you can still buy. That's not the big four. You know, Tyson. That's Tyson, National Brands, JBS. Who's that fourth one? Cargill. All right, those are the four. Cargill's private. Tyson, you can still buy their stock. JBS and National Brands, you can buy their stocks, but it's over the counter here in the United States. Both of them are Brazilian companies. All right. I think you can buy their stocks in the Brazilian exchange. But of the parent companies, that is. But this is but during this time right here, PPC and some of the other meat stocks that I've been researching in the past, their quarterly results were phenomenal because of the price increases that they had on chicken. So there used to be more pure chicken plays and even hog plays back then. Now they're all owned by the big four, except for like PPC, and there's I think like one more or something. But even that one, even PPC and that one, most of it is owned by a big four company. Like PPC is 80% owned by National Brands. Okay, so it's got one institutional owner who is diamond handing this and wants more shares and was committed to buy more shares at 31, but then the deal fell through. Probably because management saw, oh yeah, meat prices are gonna go up. I mean, usually these kind of companies, they see this thing coming. So I'm sure they said, no way, we're gonna hold out for a higher, better deal, most likely. All right. So I think this is a good play. I'm gonna buy some shares when it gets to that zone, I think. Again, the options market is kind of sparse. And the skew doesn't work towards your favor either. Maybe. I don't know. Maybe I might buy some calls as well too. Buy mostly shares and then supplement it with a little bit of calls just for a little extra juice. I might do that. But we'll see. I'll let you guys know as we get closer and closer to those levels. I really want that 29. Okay, I need that margin of safety. Okay, that's what Warren Buffett says. So that's another good point. You know, you guys asked me to talk about more longer term strategies, and that is the long term strategy concept of the day. Margin of safety. What is margin of safety? Okay, so if you've read Benjamin Graham's book, Benjamin Graham was Warren Buffett's professor at Columbia, finance professor, and he wrote a book called Securities Analysis, and a lot of Warren Buffett's investing philosophy as well as his methodology is all based. It's heavily based on Benjamin Graham's work. All right, even a lot of I think even that term margin of safety, I think he got it from Benjamin Graham. But anyway. The concept of margin of safety is this: when you buy a quality company. So first of all, we're not even talking about like companies that are on the fringe. Okay, we're talking about quality companies with quality businesses, quality execution, and great management teams. Okay, once you've identified that, you don't just go buying at whatever price. Okay, you want to buy it at value. All right. Now, where that value is, I'm sure Warren Buffett and a lot of you will have a little bit of disagreements. Warren Buffett, I think, primarily bases his valuations on fundamentals. Okay. Right now, we're basing it a lot on the chart. But fundamental wise too, when I did some calculations and with the growth that it has, and plus the signal from one of the big four that they're willing to buy at 31. I mean, at 29, it's a cheap company. All right. Let me just. I did this about a week ago, so I just got to make sure that I'm not confusing this for another stock right now. Earnings per share. Yeah, it's fine. it is, yeah. So right here, that value, so the margin of safety. So basically, stocks can go up and down, but the more value you get out of it, all right, when you trade, meaning the cheaper you get, all right, the cheaper you can get it, the more margin of safety you have, right? If you buy at the highs, okay, your margin of safety is quite low because the stock could retrace down, right? Whereas if you wait for those very valuable levels, okay, those high value levels, even if it drops, it won't drop as much, okay? Well, that's kind of the idea behind margin of safety, all right? With this stock, I do want to get as much value out of it as possible, which means I don't want to buy until it gets to that 29 zone. All right. So patience. Okay. And it may not get there. But I think it does. All right. Especially too, I think meat prices may cool off a little bit this winter. As the weather gets a little bit cooler, I think a lot of this a price increase in beef is because of the hot weather that we're having. Because of this weather, it's more expensive to maintain feed for these cattle. Cattle, they consume massive amounts of hay. At hay prices, if hay prices are going up because fertilizer prices are going up, well, that's where you could see the price increases for beef. But as the weather gets better and a little bit cooler, and also too, I read reports that there's some cows in the Midwest that are just literally dying because of the heat. And so when that gets over, I'm sure then this fear over beef supply will alleviate maybe a little bit, and maybe we might see a little bit temporary cool back or cool down in prices, but then it may spike back next year. And I think next year we're going to start a new commodity cycle. So that could be where we see a further increases. So, if you look at some of the other commodities, I mean, all the other commodities have already started coming down. I mean, we saw this in grains. Oh, grains picking back up. But anyway, grains, oil, right? We saw that peak commodity for this season, all right? So it's well off its highs, but meat prices are not. They're not off their highs. They're still going up. So I do think that it may cool down, and that might be the opportunity for us to get into PPC, all right? Hog prices still going up, still massive run. So again, we may see that cool down later on in the year, okay? Because they haven't had their pullback yet. They haven't had a major pullback yet. Well, here maybe, but it's still not. It's still very close to its highs. It hasn't had that big drawdown moment yet, like other commodities have. So that's what I'm waiting for this. And again, PPC. All right, this is one of our plays that we want to do for meat. I just want to see what Tyson looks like. Tyson. And they report soon, don't they? Okay. So perhaps an anticipation for earnings, it's going up. How many weeks away? Oh, yeah. Only 1 or 2 weeks away. So maybe in anticipation, it's going to go up. Interesting. Okay. We'll see. We'll see what happens. Actually, this looks like a good short candidate. I might add this to one of our plays. I'm going to have to do a little bit more research on Tyson before I call out a play on this. But this actually looks like a good short candidate. At around 93.82. 93.82. We go up, and then it gets shot back down, maybe before earnings. That's an interesting play. Hopefully it can stay kind of low like this until after earnings, and after earnings maybe it pops up to like 93.82. That's when I can buy some put spreads for this to go down. That's interesting. That looks like an interesting play. That looks like a short. So maybe what we can do is go long on PPC and short Tyson as a hedge. Ooh, that looks interesting. Okay. Let me mull that over for a bit. Okay. Let me mull that over. Maybe after the weekend, I update you guys on this. Oh, speaking of updates, XRT. Remember yesterday how I was telling you retail? Oh, retail came back? No way. Oh, no, it didn't. It kind of did, actually. Today it did go a little bit lower. I didn't even see that. I could have gotten in. Okay, well, yesterday I tried to get in, but the spreads on those options were so wide I couldn't get a fill. Remember I told you guys this on the plan yesterday that I wanted to buy the September put spreads. I believe I was looking for the 60-55. No. Call spreads, not put spreads. I'm sorry, dude. My brain's out of whack. Call spreads. I wanted to buy call spreads on this. And for a bounce. And I missed it because of the spread. And it came back down. I should have jumped back into it. But this would have been congratulations if you didn't care about a couple of cents, and if you got in, congratulations, because you're up probably like 30-40% from this already from those spreads. My goodness. Yeah. Wow. Well, we shall see. If it sells off, which I doubt, if it sells off tomorrow or something and gets back down there and gives me another wick lower around there, I might try and attempt to get those spreads again. But this is starting to run away. All right, it is what it is. Okay, so that's all I have for stocks. Let's look at cryptos. Cryptos is we're starting, again, crypto options market, super exciting stuff. Let's take a look here. PPC. No, where is it? Oh, there it is. So we actually saw a huge increase in the notional value. We're at 6 billion. Well, that was as of this morning. Let me see if it updated. 6.8. Oh my God. Woo, look at that. Even more. What's happening? Calls are being bought. Where are they being bought at? December 3,000, 3,500. So we're seeing increased risk taking for the end of the year. Okay, 6.8. Remember how it was at 5 and then it went to 5.4 and it started being Bitcoin. It went down to 5.3. Now it's at 6.8 billion. Okay. Bitcoin's 5.7. So there's it looks like increased risk taking on all fronts. Is that the same here? Calls. But yeah, calls. It's mostly calls. Okay. So we're seeing calls getting bought. Let me just check for Bitcoin. For Bitcoin also, but it's a little bit closer dated for Bitcoin. Bitcoin is also, it looks like Bitcoin options is more traded by retail. And ETH. ETH has comparatively more institutional participation. And the institutions are buying calls for December. Interesting. Okay. So they are definitely showing their risk on sentiment, especially for crypto. They make you, hold on. Yeah, there we go. So volumes. Oh my God, look at that. Huge volume on 3,000 on up. All right, 3,000 on up. they're just building this huge position right here, 3,000. Okay. So like I said, a couple weeks ago, I said I wouldn't be surprised by end of the year it gets here. If it gets here, and then when it gets there, I can see them having a little bit of a pullback here as people cash in. People are going to cash in these calls. I'm sure they are. I mean, from summer till now, they hold on to something like this, and they're up. Of course, they're going to take profits. You would be stupid not to take profits at that point. So before the end of the year, if it gets to down to that 3,000, 3,500 zone, that might be a good place to look for a pullback. So, if you guys are long, that's a good opportunity for you guys to take some profits, I think, at those levels. All right. But that's what I see in Ethereum. I mean, so much institutional participation. There's so much money coming in. Look at that. That's another $1 billion that just went into ETH options market. Last night, I think we were talking about it was like 5.6 billion, 5.8 billion, right, guys? And now it's at 6.8. Wow, that's crazy. That's just crazy. A lot of money is flowing into this. Okay. All right, let's go through the plan one more time. Let's go through the indicators, the plans, and what we're looking at. Okay. Again, guys, it's really all about the dollar. We're looking at this dollar. It's still under its 18-day moving average. All right. It touched it and it's just pulling back. The Eurozone is below its 18-day moving average. It's going down. This is going to put pressure on Eurozone stocks if it keeps going down. Okay. So we're positioned for that. I'm still mostly in cash, but we'll go through the positions. But I just wanted to go through the indicators first. So the dollar, again, watch out for the dollar and the 18-day moving average. Watch out for the euro and the 18-day moving average. If the euro just decides to pop up to like 1.06 or so, get ready for S&P 500, 4,300 to 4,400. Okay, just get ready for it. Okay. That is where I'm going to buy put spreads 3 to 6 months out. Okay, that plan hasn't changed. If the dollar is under that 18-day moving average going on a downslope, and euros going up, I'm not going to buy those put spreads until we get to that 4,300 or 4,400 zone. All right. So that's where I'll buy some puts 3 to 6 months out for that last leg down, which I believe is going to happen. All right. And again, my buying program hasn't changed. I buy at 360 and then I buy more at 342. And on 340 on down, I start buying in the money calls that are a year out. All right. Nothing has changed on that. Still have my DIA position. Nothing has changed. Still in the October 300 290 put spreads for October. Long the 300, short the 290. All right. I'm still in EWT. EWT, we're at around break even now finally. For December, 49.40s, long the 49, short the 40 puts. Looking for some action overseas in Asia, okay? That's the Taiwan ETF. FEZ, the Eurozone stocks ETF, still in the November puts for 32.27, long the 32, short the 27 puts, still in that position. As you can see, it's losing some of its gains. I think with the natural gas prices going crazy over there until November or December or so, that should add a little bit of a headwind for Euro stocks. At least that is the bet so far. All right. UVXY, I'm still in those spreads. It's still in the 14.24 and the 15.25. Long the 14, short the 24. Long the 15, short the 20. Okay. I'm still looking for that big VIX spike. We'll see if we get it or not. Okay, we'll see if we get it or not. I have until December, so I do have some time on my side. All right. I also was able to transfer over my HUT shares from my long-term account to here. And yesterday I already posted that I sold some calls right here. Those calls are a little bit under the water. I sold it around like 22, I think 22 and 24. I scaled in. So I'm down maybe a couple of cents. Not too bad. We'll see. I have until January, and they are more than double away. And it is above my cost basis. My cost basis on my HUT shares is like a little bit less than $4. It's like in the 370s and 380s now. All right. So I don't mind getting rid of them at 5. That would put me at the profit. So I sold those. We'll see what happens. I think, it'll chop around and probably go down. And when it gets to around that 150, 160 zone, I'm going to load up on way more shares. I'll probably increase my share count by 3x, 4x. Okay. And then it will still be a relatively small position. It is a very speculative stock. So I think it's more appropriate to be in my spec account anyway. But I do own shares of this. I do plan on buying more when it gets to 150, 160, but I did short some calls here. All right. And these are covered calls. What else? PPC. Still waiting for that 29 zone to enter in some shares, maybe some options, but I am looking at shares. And also too, the DGen play, okay, DGen. This is a DGen play, guys, okay? So don't be putting good money into this. This is a lotto. All right, I will be looking at doing some type of put play here. Again, this is just based on Azure's earnings. Azure, which is Microsoft's intelligence cloud solution, they said they stole a few 100 million plus contracts from a competitor. Who could it be, right? Google's cloud solution services came in at really well too. They grew at 36%. Azure grew at 45%. AWS. Do I think it's going to grow in those terms? I mean, it may grow, but I think some of its market share is getting taken by the names like Azure, which is cool. So I am going to be buying some put spreads. I don't know which one I'm going to be using because, I'm going to get it close to end of day because I don't want to pay for any time. I want to pay for as little time as possible. But we were looking at either the 117, 112 put debit spread, which would be long the 117, short the 112, or long the 116, short the 111. Okay, I at least want 4-to-1. I want around 4-to-1 reward to risk on this. Okay, because it's very well could go to 0. So for that risk, I want to get paid. I want to make sure that I get paid, rewarded for that risk I take. So I want that 4-to-1. I'm going to be very strict about that 4-to-1. All right. So I'll let you guys know on Discord which one I choose, okay? I'll come back about 15, 20 minutes before Discord and then go over this trade again, all right? So that's another trade. What's another one we are looking at? Ford doing extremely well. Ugh, what a missed opportunity that is. If Ford comes back down to like around 1220, 1230 or so, I might buy some shares for the long term. All right, 1220, 1230, I'm going to buy some shares for the long term. All right, so that's my plan for Ford as well. All right, so that's my plan. All right, we'll see what happens. I'll try to do another episode tomorrow. I can't guarantee that, but I will try. But but definitely later on today, I'll be back on to help you guys with that, to show you guys what I'm doing with Amazon. It's up to you whether or not you guys want to join in on that or not. Any questions, any comments, any rude remarks? This is your time. Going once. Going twice. Sold. Okay. All right. Well, that wraps up then our high noon highlights. Thank you for joining us today. As always, I'll post the video on our wiretap tapes. If you're joining us from YouTube and Twitch, join our Discord. We have conversations like this on a daily basis. I will leave our Twitch stream up so that you can see the charts and data that I'm looking at throughout the day. And I'll hang around in the Discord for a bit. Okay, guys? Stay safe. Stay small. Again, the big moves after FOMC could happen a couple of days afterwards. They may happen even after the weekend. So not a bad idea just to sit tight for a bit until until Monday or next week when we see